Well, let's see if we can apply a little bit about the indirect method that we just learned. If you haven't done so yet, please pause this and print out the Chapter 16 worksheet that you'll find on Blackboard. And it would be best if you gave it a try. Come on back when you're done. Okay, here we are. We're going to classify each of these things as operating, investing, or financing activities so you know what section of the statement of cash flows to put them in. Letter A, paid cash for property taxes on the building. Property taxes sounds like an operating activity to me. Now, here's a tidbit for you. If it's on the income statement, it's an operating activity. Very simple. B, paid cash dividends. Well, it's not on the income statement, is it? So you might, but it has to do with buying and selling, with issuing stock. Therefore, it is a financing activity since it has to do with stock. Letter C, paid cash for wages and salaries. You pay wages and salaries to operate your business, I believe. So that's going to be an operating activity. D, purchased inventories for cash. Now, some folks look at that and say, wait a minute, that's an investment in the business. Well, it is, but it's not a long-term investment. You really want to sell your inventory like crazy as you operate your business. So it's an operating activity as well. When I purchase that inventory, what's it going to do? Decrease cash. Letter E, received cash payments from customers. Customers show up because you're operating your business. F, received cash from sale of land at a loss. Well, when you bought the land, you were making an investment. When you sold the land, it's still an investing activity. What about that loss? Well, remember what we have to do with that. It's a non-cash event that the accounting department has put on the income statement, even though it had nothing to do with cash. So we're going to have to add that loss back to our income statement if we're using the indirect method. Letter G, receive cash interest on a note. Well, when we make that note, we're making an investment. So if we make the note, it's an investing activity. If you redeem the note, it's an investing activity. If I receive income from the note, that's no different than me selling you a snowball at my snowball stand. The interest received is an operating activity. H, paid cash interest on outstanding notes. Same deal. Same deal as the prior one. Letter I, issued common stock for cash. We issue stock to finance our business. And lastly, sold long-term investments for cash. Certainly an investing activity. Okay, so that's just a summary of a few of them. I hope you get the idea of all we're trying to do is decide which section of the statement to put these activities in, put these transactions in. Now, as we go through the indirect method, what are we going to do? We're going to go through the balance sheet, and we're going to see, look at the balance sheet account, decide is it an operating, investing, or financing related account, and if it goes up or down, it's going to have an impact on cash. So, number 2, an increase in the balance of prepaid insurance. Well, acquire prepaid insurance by buying insurance. So what's it going to do to my cash? It's going to decrease my cash. Number 3, a decrease in supplies on hand. Well, sometimes you have to look at things from both directions. So what if you say to yourself, I'm not sure here. Look at it the other way. What if supplies increased? What did we have to do? We had to buy them, right? So if they increased, cash must have gone down. So if we decrease them, that's like getting cash. So if you go to the school cafeteria and you walk in and they say, here, take this sandwich, it's on us. That's like getting money, isn't it? Same thing here. You decrease the supplies, it's like you're a positive to cash. Number 4, the proceeds from the sale of equipment formerly used in the business. So I bought a piece of equipment. It was an investing activity. I'm now selling that piece of equipment. It's still an investing activity, and the proceeds I get for it will be a positive for my cash. Number 5, a decrease in inventory. Well, if inventory goes up, it's because I bought it. If inventory goes down, it's probably because I sold it, so cash will come. It's a positive for cash. Number 6, an increase in the current liabilities, income taxes payable. An increase in any liability is really just another name for borrowing money. And if I borrow money, what happens to my cash? It goes up. Number 7, a decrease in accounts payable. Decrease in accounts payable. If I pay my accounts payable, I must use money, so my cash will go down. And lastly, an increase in accounts receivable. An increase in accounts receivable means I sold stuff and got no money, so it's like cash going down. Look at it the other way. Accounts receivable decrease means I got money because you paid me. This is just the opposite. Okay, so moving along. I've given you some information here on BOCO Incorporated. Here's their income statement and balance sheet. And I'm just going to ask you to prepare the statement of cash flows operating section only using the indirect method. So let's see. We always start with net income, don't we? Net income was $10,000. Now, we're going to look over here. We're going to look for non-cash events such as gains, losses, depreciation, and amortization. And I see one right there. Depreciation expense. It lowered my income, but there was no cash involved. So what do I have to do? I have to add it back because the accounting department subtracted it as an expense, that it's a non-cash expense, and I'm converting to cash. So here we go. Easy enough. Now we're going to look at our current assets and current liabilities, and we're going to see what happened. First of all, don't I know the answer? Don't I know that cash went up by $5,000? Started at 15, ended at 20. So my answer here is going to be 5,000, I think, isn't it? Hey, accounts receivable started at 10, ended at 8. So it was a decrease in accounts receivable. If accounts receivable goes down, it means people paid it. So that's $2,000 they paid me. How about inventory? Inventory went from 8 to 12, so inventory increased. So that's 4,000 that we spent. Let's move on. Accounts payable went from 4 to 5. So we've got an increase in accounts payable. Accounts payable increases because I borrowed money, so that's $1,000. What else happened? Income taxes payable decreased. So income tax payable decreased by $3,000. So I decrease a payable by paying it. So what's my cash from operating activities? $10 plus 5 is 15, plus 2 is 17, minus 4 is 13, plus 1 is 14, minus 3 is $11,000. Now, a second ago, I said we knew what the cash change for the year was $5,000. Now, you're probably saying to yourself, wait a minute, 11's not 5. So where was the other 6,000? The other 6,000 will have occurred either in the in the investing activities or in the financing activities. But cash from operating activities alone was a plus 11,000. Okay, I hope these helped reinforce what we learned about statement of cash flows.